Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the Americans are getting increasingly reckless on the trade front. The Trump administration has announced it will target another $200 billion of Chinese goods for sharply higher tariffs. The announcement happened after Wall Street closed yesterday. Bond market yields turned down, both the Japanese yen and the US dollar rose in a risk-off mood, and gold lost another $12. Asian equity markets responded very sharply lower yesterday, down the thick end of 2%. Today, Wall Street took fright as well and is down about 1% in the mid-afternoon trade. China's retaliation is yet to be announced. Meanwhile, American producer prices increased more than expected in June, up 3.4% from the same month in 2017 and higher than the 3.1% markets were expecting. Key rises were in the cost of services and cars, leading to the biggest annual increase in more than 6 years. Those higher prices came as evidence rises that inventories are building again in the US. North of the border, Canada's central bank raised their policy rates as expected to 1.5%, but some analysts think this is a case of one and done. But most think another 3 or 4 rises can be expected as the inflationary pressure builds, including from the trade and tariff pressures they are facing. In Australia, a new survey of property investors found a gloomy mood. Confidence in house price growth and the availability of finance has plummeted, with the tripling of the number of surveyed property professionals lowering the expectations in those two areas. And this comes after official figures show that new loans to housing investors fell to their lowest total in more than 2 years. And staying in Australia, their tax authorities have been analysing the tax gap for companies and individuals. It turns out that for every $1 in tax avoided by multinationals and other large companies, $3 is cheated by individual taxpayers, much of it aided and abetted by accountants. It's been called a national sport. It's their voters who are the serial cheaters, overclaiming work and other expenses and costing the thick end of $10 billion a year. The US Treasury 10-year yield is now at 2.85%, a 2 basis point fall overnight, and the US 2-10 rate curve has narrowed again, now at just 26 basis points, a new low since 2007. The Chinese 10-year is at 3.54%, that's down 2 basis points, while the New Zealand equivalent has stayed at 2.89%, that's down just 1 basis point. Gold is down by $12 to $1,243 an ounce. And US oil prices are down sharply today on the rising prospects of a tariff-induced US economy stall. They are down $4 to just over $70 a barrel. The Brent benchmark is now down to just $76 a barrel, a $6 drop. These falls came even as US crude and petrol stocks fell sharply last week. And the sudden shift to a risk-off mood has resulted in the Kiwi dollar starting today lower by half a cent to 67.6 US cents. On the cross rates, were unchanged at 91.7 Aussie cents and lower at 57.9 Euro cents. That shifts the TWI down to 71.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.